Hello traders and welcome to another video review. Today is Friday, January 15th, 2026. Let's take a look what do we have on the economic calendar for today. So, Asian data from the overnight sessions, Japanese were mostly from Japan. Jobs applications ratio up to 1.19. Tokyo core CPI down from 2.3 to 2.0. Industrial production improves from minus 2.7 to minus 0.1. Retail sales down from 1.1 to minus 0.9. PPI in Australia 0.8% worse than expected, and private sector credit 0.8% up from 0.6. We are looking for the French consumer spending and French GDP data, worse than expected but better than the last time, from 0.9 to 1.1. We are waiting for the nationwide HPI data from the UK. Then we have plenty of the data from the Eurozone, French non-farm payrolls, KOF leading indicators at 9 o'clock, Spanish CPI, GDP, ICP, German unemployment rate at 9.55, and at 10 o'clock we got the major event of the German GDP expected to grow from 0 to 0.2, and then at the same time Polish GDP and Polish CPI, very high expectations from the Polish Polish GDP. It should go up from 2.9 to 3.6% together with this data. Unemployment rate from Poland will be released. 1 hour later at 11 o'clock, GDP from the Eurozone is scheduled for release, and unemployment rate as well. And German CPI data scheduled for release at 2 o'clock. 30 minutes later, we got major event of the US session. PPI data and core PPI data scheduled for release. Data from the Canada at the same time are scheduled for release in form of the GDP. And at 3:45, we got Chicago PMI data scheduled for release at well. So this is about the economic calendar for the Friday. Let's start with the charts and the technical part of the review. As usual, we start with the euro dollar. So the euro dollar is now developing the corrective wave in our situation, in our scenario. This is the wave 4. Local technical resistance has been established here, as you can see, at 1.1997. So we need a breakout above this level to test the highs of the wave 3, 1.2082. Otherwise, wave 4 will be still in progress unless this is, of course, completed. When it is completed, then the wave 5 to the upside is needed. We got a very nice, well-defined technical support, intraday technical support, 1.1897. We are waiting for the wave 4 to be completed. RSI already hit the level of the 50 after moving down from the extremely overbought conditions. British pound. British pound is doing the same situation, is in the same situation that the euro dollar is, as it is developing the corrective wave 4. So right now no changes here. We almost hit the level of 50 on the RSI. So as you can see, a little bit of the consolidation, a little bit of the pullback, a little bit of the correction in wave 4, and then still wave 5 is missing. If, of course, this is the impulsive wave. It looks like it is impulsive wave, very, very strong wave, very nice wave. So please keep an eye on the current situation on the cable. US dollar versus the Japanese yen is bouncing from the extremely oversold conditions. RSI almost hit the level of 50. The swing high, local high, not the swing high, but the local high is 154.14, just below the level of 154.48. This is the first technical resistance. If we break above this level, then the local high needs to be violated, 154.91, and then there's a gap to be covered located between 155.48, 155.68. So 30 pips gap just above this this technical resistance on the US dollar versus the Japanese yen. It looks corrective to me. This bounce here looks corrective to me. Any breakout below this short-term trend line support is bearish. So basically, if we made it, of course, orange, any breakout below this line is bearish. Gold, big situation on gold. Finally, we got some correction, some pullback, because I've told you guys there is bearish divergence. There is multiple divergence on what is the price doing, on the price action, and what is the momentum doing. And you got this situation here made basically visible yesterday. So how much did we went to the downside? Let me just take my price range tool. We went at least, I think, like 10%, I think, something like 892. There you go. So 9% correction was made yesterday. Today, as you can see, the market is still under the pressure. Momentum broke below the level of 50 for the first time since, well, this is the January 16th, this is the January 8th. So if we go below 47, we are already below 47. All right, so that's the situation. That's the first time in the new year, because that's the January 2nd. That's the end of the year, basically, right? So that's a kind of a interesting situation here. Minus 9% on gold yesterday. 5,110 is the level that holds the bearish pressure. So if this level is violated, we might see even lower. We might see another wave to the downside. 4,888 is next level. So that's the gold. S&P 500 big spike to the downside again after the rejection of the internal trend line. But the market is inside of the range, and it's trading roughly around the 100 periods moving average at 6,923 points. Momentum at the level of 42, so a little bit below the neutral level. Nevertheless, it still looks like the bears are trying to push the market lower, basically. So far, not too much avail. This level is not being maintained. So let me just remove this level here, and I will place it here, so we can see that there is a swing high, new swing high, and this trend line might be quite useful. And we got something like this here, so maybe the trend line is providing some sort of the support as well. Yesterday's high 6,867 technical support. One more technical support is located here as well. So minor levels here. Those levels are not that much important because the market extremes is really the one that we are looking at. Nevertheless, some levels here for the bulls, some levels for the bears. Let's wait for the S&P 500 to make up his mind. Crude oil hits the extremely overbought conditions, hits the level of 647. Big pin bar at the end of this move, confirmation and extension to the downside, even towards 63.64. We hit the zone here, supply zone. Yes, this is the zone I've been talking about. We hit this zone, but only one red candle is being produced right now, and this red candle is today's candle. So we can see some sort of the color change of this candle if we close green, right? But we hit the extremely overbought conditions, so maybe, just maybe, this market needs some pullback, needs some correction. The nearest technical support, quite important technical support, is located here around 62. Let me just place this line on the correct level. It will be roughly around here, 62.32. Very nice, very tight demand zone here and technical support. Excuse me. And last but not least, the Bitcoin. The Bitcoin obviously went where it's supposed to went. We broke below the black trend line. We traded a little bit up when there was the divergence. We went as low as 81,126. Now, why I'm showing you this? Because we broke below the three green lines, as you can see here, and we hit the extreme low from the November 21st, 2025. Right? So if there is no movement to the upside from this low, then the Bitcoin is in big trouble. All right? So please keep an eye on this current situation. Okay, obviously I need to move my arrow. Please keep an eye on this situation, because if we break below 81,000, exactly 80,590, Bitcoin is in big trouble then. So that's our situation here. This is my technical support. Now, of course, these levels are technical resistance, which is why I'm changing this this colors to red. So we got the technical resistance here, but this technical resistance might be very easy to violate. You know, might be very easy to break below this technical resistance. So please keep an eye on this level. There you go. This is the situation. This is the current situation here. Even one more level can be switched to the red. There you go. Very strong movement to the downside, very well orchestrated. Maybe it has something to do with the options expiring today, last day of the trading day, Friday. Nevertheless, you can see that dips are being protected, dips are being backed back up because we hit again extremely oversold conditions. Now the bulls are starting to protect the dips, right? So please keep an eye here on the Bitcoin. It looks like the down move might be done today, tomorrow, and the new week might bring different approach, maybe some sort of the pullback towards the technical resistances or even the trend line. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.